evening and welcome to the Australian Stock Market Show. We do hope you've had a great week so far and are staying safe. Think about this. The only limitation is that which one sets up in one's own mind. This is a quote from Napoleon Hill, author of the book Think and Grow Rich. This begs the question, what limitations have you set up that are holding you back? Tonight, our aim is to share with you how you can better understand the stock market and how to profit from it as we educate and inform you. We will also answer your questions as we bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is US and ASX tech stocks are falling. Is it time to buy or bail out? Hello, I'm Janine Cox, our host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you today?
I'm fantastic. What an awesome day it is today.
Beautiful, isn't it?
I know. Beautiful sunny weather, no wind, everything else.
Can we say
awesome.
beautiful one day perfect the next?
That's what Melbourne is.
That's what Queenslanders say.
I
Can we
just
steal
think
that one?
Melbourne has weather.
Really?
Queensland's just hot or hotter. We just have weather. So, but it's awesome.
We never know weather. It's going to be hot or cold, is that
We
it?
never know weather. But no, I took the advantage to get on my motorbike and instead of driving to the shop to buy some stuff for dinner, I got on my motorbike and went out in the sunshine and rode my motorbike. That was my big outing from house.
Well, can I call you Evil Knievel?
No.
Did you pop a few wheelies along the way?
No.
Oh, come on.
I'm a safe rider.
Okay.
Basically, you want to know how I ride my motorbike?
Yep.
I just assume everybody's out to kill me. If I assume everybody on the road is going to kill me, even kids on skateboards, if I think they're going to kill me, I'm not hitting anything. That's my cousin taught me that one. She's probably watching tonight. Hello, Diane.
Very good.
Cool. But anyway, before we get into our first segment tonight, we want to take some live calls onto the show. And if you do want to chat to Janine and ask a question, then this is your opportunity to pick up your phone and call us now. Now, the number you need to dial is 0392909988. That's 0392909988. And to get things started, the first person to call into the show tonight will get a copy or a free copy of my latest book. So if you dial in first, you're going to get a copy of my book. Now, I know Janine and I are keen to chat to you, so pick up your phone and get dialing now. And that's the bonus for getting in early on the show.
While we wait for you to call, it is the second Tuesday in the month, and this means we take a look at the sectors in the Australian stock market. So let's get into the charts.
All right, on the screen right now is the watch list of all the sectors in the Australian market. Now, you've set it at, what, 1 year at the moment?
I've got it at 1 year. I thought I'd be crazy.
I saw all these big numbers in green. I'm thinking that's got to be a year. Before I put my glasses on.
Imagine if it wasn't. Imagine if that was the month.
If that was the month, I think we'd all be excited,
I think you'd be falling off your chair on the floor.
I think I would have been falling off my chair. I would have been having to take something to lie down.
Yeah. Okay, so look, at the top of the list we have the financials. Is anybody surprised about that?
Haven't they done so well?
Financials have. The question is, will they continue to do that? Communication services, they're in at 20% at the top there. So things like Telstra, which have done incredibly well. Consumer discretionary up 17%. And then we've got energy following behind. There's a big drop there, isn't there, between the top three at the moment.
And yet earlier this year, or late last year and earlier this year, we thought energy would be the bigger one. You know, and we did think financials would do well.
Yes.
But they've done very, very well financials in this market.
Yeah, look, absolutely. Look, 11% up for energy is just a 6%
really
jump
good.
between that and consumer discretionary.
That's huge.
No, but in a big growth sector like energy is supposed to be, that's probably on the soft side, if anything, 11%.
Yeah. Correct. It is a little bit on the soft side when you compare with, as I said, we did think it was going to be a lot better, didn't we?
We did. So Australian All Ordinaries Index up 10.58%. The ASX 200 consumer staples up 8.4%. The industrials 7.4% higher, and healthcare now. That's the interesting one, isn't it? Normally the defensive, the high growth area healthcare, 5.78%. So, hey, I know what you're already thinking about that. Potential.
Absolutely.
Given that there's not been huge growth over the past 12 months. Information technology down 0.96, yeah. And look, given it's in the negative for the year, surely that's going to mean that there are opportunities next year. Utilities, 3.45% down. Materials.
Now, imagine
now that's an interesting one, isn't it?
Imagine if that had done 10%.
But that's such a big change really
That's
quick.
huge.
You know, look at what's happened with FMG, Rio and BHP have driven that down.
Correct. I mean, as you've said numerous times on this show and in our reports, you know, if financials and materials go together, so does the All Ords.
Yeah.
But the materials down 3.83% for the year.
So we've got a complete contrast. You know, financials are up so strongly and materials are down so strongly. So what's that going to mean? I mean, I remember after the GFC there was this split in the market in terms of the financials and materials doing the opposite. So we were wondering when the market was going to push higher, and if both of them go together, then we know we're going to have a super bullish market.
Correct. I mean, obviously materials took off last week and did really well. BHP, Rio, Fortescue, all doing really, really well.
Now we're still expecting financials to do more for us next year, but we're waiting on a bit of a pullback on the financial space.
Okay, so we're going to look at any charts. I know we're going to look at financials and materials.
I know that you've been, you know, you're pushing me to do this, aren't you?
I'm not pushing you in any direction.
Oh, yes, you are.
Financials and materials will be fine. Okay.
All right. So financials, we're looking at the chart there. Now, we could see it track higher. There's potential for it to go through this high. If we see it move through that August high, so what's that, 6,855?
6,871.
Then I think it's more likely to head towards the high of the pre the collapse of the GFC. If we see, I'd rather the sector actually pull back now.
Yeah. So
we get the pullback over and done with, and then we see a fresh start for the financial sector. That'd be fantastic. Doesn't always happen the way that we want it to, though.
No, it doesn't. But
all right.
You know, I would be thinking the same thing. Yeah.
So, but still defensive. Financial is still quite defensive in terms of that sector. Materials. I'm looking at that and thinking, wow, how does that happen? And how does it happen in such a coordinated way? You know, we're talking about, you know, is it collaboration in terms of a sell-off there? Well, it has to be.
It has to be.
Because how is it that they sell off FMG, Rio and BHP like that?
All at the same time.
All at the same time in a very similar way. Okay, we've seen the commodity, the underlying commodity, iron ore, go down at the same time. So it's algo trading, would you say?
Oh, look, it's got to be something like that, and that's, you know, obviously we could spend a whole show just on algo trading and what we don't like about it and why it's not that super fair to retail traders and investors. But, you know, you've got to think something's smelly, don't you?
Yeah, so look, I mean, I would say that this is still a great sector and I'd be looking for really good opportunities there, but we just are not sure whether the bottom's in just yet.
Yeah, and that's what I'd be right onto that one anyway.
All right, that is all from us on the sectors in the Australian stock market. Now it's time to get into our first email for the night.
Okay, now our first email from tonight is from Monica, who says, "Hi Dale and Janine, I bought some LITCF partly paid shares and I'm wondering how I pay fully my shares to LIT to have a fully paid shares. I'm a beginner and this is the only risky share I have in my portfolio, but I like Lithium Australia. I bought your 2 books and have enjoyed them and are still learning a lot. Thank you, Monica." So it's a pretty simple question to answer. You just pay the other part, Monica. That's pretty much as simple as it is. What you've done is paid for part of the share, as you said, and you've got a different share code than the fully paid ordinary shares, which is LIT. And all you've got to do is contact your broker and pay the last part of it, and you'll own the shares.
Actually, if you don't mind, I thought we could just show something interesting on the chart. Yeah, because what I've got is I've got the chart of the actual stock.
Us to look at the
I
chart,
know, but just briefly, can we please? Come on. LIT, right? Lithium Australia there. So what you can see is that LITCF, which is the code that was raised, it's actually very much the same, which you'd expect because it is the same stock. But you're just seeing that part from when this came into effect.
Yeah.
Yeah. But interesting, isn't it? How fast it's risen since then.
So what are you telling me?
Well, I'm saying that, you know, when this offer was made for LITCF, the stock actually rocketed. So perfect timing, isn't it? To have actually,
is it?
Yeah, to have actually bought in. So I was quite amazed at that. So I thought I just wanted to share that.
So you're telling her that's it's good share to own or hold?
At the moment, there's potential downside risk. So if the stock actually, you know, takes out this low here, then I'd say that I'd be quite concerned about it in the short term.
Okay.
What we're wanting to see now is a turnaround. It's been down now for a few days, so it needs to get back up above around 80 cents pretty quickly. Okay.
Well, if you want to talk to Janine and I, give us a call on 92909988. And remember, the first caller tonight gets a copy of this book sent out to them free. So just ring 92909988.
Now, we actually do have a caller, which I'm really excited about. It's Prem. And Prem, would you mind telling us what state are you from?
No, I'm from New South Wales.
Fantastic. Well, thank you so much for calling. And you have a stock to talk to us, or for us to talk to you about tonight. Which one is it?
Thank you. I did buy a few of the travel stocks like CTD, Flight, HLO, and Web. And my particular concern, particularly with FLT, I bought it about 2 months ago at 14. So I was actually wondering how it's going to go.
You're talking, it was ASX your stock? I wasn't quite sure which stock are we talking about.
I
ASX?
didn't pick up which stock it was because you mentioned about 4 stocks.
Yeah, that's right. Particularly with FLT.
Flight Centre.
Flight Centre, FLT.
Okay,
Sorry,
mate. Sorry.
That's
Yeah.
okay. So this is a stock you own?
Yeah, that's right. I bought it at 14 about 2 months ago.
Gotcha.
And so it's like, it was good, it was going up, but I think it's starting to slide down, so I'm not sure what's happening.
So you're a little bit worried about it because it's starting to slide down a little bit.
And they said the economy is going to open up as well, so I just wasn't sure what's happening.
Well, I'm champing at the bit to get on a plane, mate, and travel, so I'm sure a lot of people are, but we'll bring the stock up now. You having trouble,
I seem to have a technical issue.
Let me fix it. You talk to Prim and I'll fix it for you.
He thinks he's going to fix it. Look, Flight Centre's been so interesting, hasn't it? I mean, it had gone from, incredible lows, and it's been trading up as, I guess, people become more optimistic about the potential for people to travel interstate and internationally. There's some excitement building in that space, and Qantas has been a recipient of the growth as well recently, but Flight Centre's just gone up incredibly well. Look at it. You did fix it.
I fixed it.
You did fix it.
Because I've got to turn the keyboard on.
Oh, thank you for doing that.
But I forgot to do that earlier, so that's my fault.
I'll forgive you.
Yes.
All right. So look, we can see there a nice strong rise. So, what do you think about Flight Centre?
I think it's looking really good at the moment, and I think a lot of people are thinking like Prem, getting in before it opens up, because there's not much more doom around than what we've seen with the tourism and travel industry, is there?
That's true.
And Flight Centre, when things open up, it's maintained its presence in Australia.
But how do you enter it now, looking at the chart?
Well, you probably wouldn't. The thing is look at the chart, because you're allowed to use the mice, to show people. I've got to put my glasses on now. But you wouldn't enter it now. But I wouldn't be too worried about this, Prem. It's gone really, really, really hard through. If you look at this, we can see here from that low there back in mid to late August, we're talking an 84% move, and so what you're looking at, it's just adjusting back. It doesn't go that hard that fast for that long. So all you're seeing at the moment, mate, is it just easing back a bit from this stellar rise over this 1, 2, 3, 4, 5, 6, 7 weeks. So I'd probably drop back a little bit. It might come back to sort of around that $21 and then
But the key is obviously to have a strategy to exit, and it's really hard when a stock goes up so strongly like this to actually protect the downside. So you almost have to wait for that pullback and see if you can actually get a level that makes sense to get out at.
Yeah, so basically Prem bought in at $14, so he's doing really well at the moment.
He's doing well. Our next email is from Peter. Hi, Dale and Janine. I'm interested in the future of ALL, and while it looks to be continually rising, I suspect that it may have reached a peak. Peter. Wow, look, that's exciting, isn't it, to see ALL go up like it has and now having a little bit of a pullback. I mean, we thought it was going to pull back a while ago, and it now is looking like it's going to do it. So what would you say right now about ALL?
I don't know. Why are you asking me all the questions for? Geez, you're going to keep me busy.
I'm just trying to see if your brain's working today.
It is. I've been very busy today. I actually do. This is another stock I actually quite like. And it's just,
were you hoping to just sit there and go to sleep and let me do all the work?
Well, I was hoping, because I've done all the work today.
Oh,
You've just done nothing all day long. But I do like this. I mean, it's had, obviously there's your all-time high there back in mid-September, and it's just had a couple of weeks down. But it is not coming down very much, and that's the exciting part about this, is the market still likes this stock. And if you can see there, it's about 10% down. It floated down. It's high. It's obviously higher today. If we look at the close today, it's up around here. I just think it's come back to a bit of momentum, but
I'd like to see it pull back to about $42, and then let's see what
up around
it
this
does.
level. Yeah, me too. I think the whole market's. To me, I think the market.
It's a nice trending stock. You can get nice trend lines up underneath stocks like this.
That's what I like about it. It's
easy
a really
to protect,
nice
isn't
looking stock, and it's an easy one for people to trade.
Okay, great. All right. What are we going to talk about next?
Well, I think we've got another email, don't we? And this one is from Courtney. But Courtney says, "Hi, Dale and Janine. I bought my 2 young children some quality ETF shares, QLTY ETF shares a couple of years ago using my NAB trade platform with their savings. Now I've decided I would like to buy some of these shares for myself how can I separate my purchase from theirs in my trading account, or do I have to sign up for another account, which I would find annoying? I look forward to hearing your advice, Courtney. I'm not going to tell her because it's going to be annoying to her what the answer is.
She'd have to set up another account.
You have to set up another account, Courtney.
She'll have to speak to her broker, won't she?
Absolutely, because it's about capital gains taxes and everything else. So when you trade for kids, it's often better just to set up an account for them separately in their own name, and obviously you're the trustee for all of that, because children are allowed to earn income up to a certain level before they're taxed, and it used to be about $200 or $300 a year or something like that. So you can actually put money into their own name. So it may even be better for you to transfer what you own and those into their own share portfolio, basically.
I'd talk to an accountant as well.
No, the accountant won't know.
The accountants know all
They know
over
about
this
the
stuff.
income level, but they don't know how to set up the broking accounts.
No, not setting up the accounts, but they actually know what you can and can't do.
Yeah, so from a tax point of view, from the kids earning income, and I'm not sure whether this ETF pays income, but if it does, then you just make sure you're under that threshold.
It would pay income more than likely.
Kids pay
a lot of these
tax.
ETFs do, especially this type of ETF from beta shares. A lot of them will. But I'm interested in the fact of what she's saying, that she's wanting to buy into this now, which to me that would be interesting because it's actually falling quite strongly.
Yeah, I just hang back. But I mean, she's obviously, she's a long-term investor, obviously, and she's done a great thing for her kids. I think that's fantastic.
Oh, that's awesome, isn't it?
That is brilliant. And she did mention that she puts money in them regularly for the kids and splits it 50-50 so they don't have arguments, which is really nice. So I don't have a problem with this long-term if she's doing it long-term. But just talk to your broker, look at spreading up your accounts because you don't want to affect your tax, because if they're in your name, it's going to affect your tax, so maybe talk to your accountant as well, as Janine suggests, but that's what I would do. But I do like your thinking there for a long-term thing. Now we do have another caller on the line. Who have we got on the line? I think it's a Cam, is it?
Yep, speaking.
Cam, where are you from?
Sydney.
Oh, another Sydney person. Well done. Out of lockdown yesterday, living the dream, they tell me.
Yeah.
That's cool. What's your question for us today, mate?
Yeah, I would like to interest in looking buy for the share SGR, the Star share.
Stars?
Is it a good time to buy now?
Okay, so you don't own the stock, you're looking to buy SGR.
Yes.
Okay, so let's bring up SGR and have a look at it.
I have already. Would I buy this? No way. This is a really easy answer to that question, given it's just fallen through the floor. Probably that's what attracts some people to it, because fundamentally it might all of a sudden look like it's value again.
Well, that's the 60 Minutes factor, because it was all on 60 Minutes on Sunday night about all the corruption and the money laundering and everything else.
Well, it's just taken out, I don't care about that for now, but I'm just looking at the chart. Technically, it's just taken out this low, and to us that means that it's potentially got further to fall on the downside.
But you saw what happened with Crown Casino after all the stuff with them. With the same thing. So
for years this has been going on.
Yeah, so look, mate, I would be staying right out of this stock at the moment, I would say. So if you do try and get into this stock, you could be catching a falling knife. And yes, it's fallen from sort of 480, 460, 480 down to about 320, but it's just not worth the risk right now. It's wait for it to hit the bottom before you get into it. But thank you for your call, and if you want to be like the callers we've had, that's fantastic. But before we do get into tonight's topic, later on the show we will give you another opportunity to call in the show and ask Janine and I your most burning questions, because I know you're champing at the bit to do so. So stay tuned for the opportunity. More importantly, be ready to dial when we tell you to. Call now. Okay, now it's time to get into tonight's topic, Janine, which is US and ASX tech stocks are falling. Is it time to buy or bail out?
To get started, it is best to set up the context of what has occurred. Last month, several analysts reported the tech sector was overvalued. They did that when both the US and Australian tech sectors peaked in price. After this, both fell more than 10% into early October.
Now that was before the US Federal Reserve announced the likely tapering of bond purchases when it next meets in November, and this announcement had the effect of lifting both sectors off their lows.
Now, some analysts have suggested that with short, sharp dropping a few weeks ago, that now is the time to buy. But was the bounce up last week a sign of a new bull run or just a pause in the move down? Well, tonight we'll examine both the US and Australian technology sectors and take a good look at several of the hottest tech stocks in the market. And more importantly, share our opinion on whether now is the time to buy or should you get ready to bail out.
Janine, yeah, I'm always excited when we talk about tech stocks, Janine, as they cover a wide range of investing opportunities from startups to blue chip stocks and pretty much everything in between. Now, why they are talked about widely is that they can provide significant growth opportunities for investors to profit, but only if you get the buy right at the right time.
Absolutely. We all know technology stocks can rise very quickly, and we've seen some gains on some technology stocks of well over 100% since COVID started. Now, the conundrum for investors is whether to buy, hold or sell.
Indeed. And in fact, I will add that to one of the most important pieces of advice I can give viewers to aid them in answering this question is to encourage them to remember that when making decisions, regardless of the amount you invest, always do your own research. Now, one of the mantras I have is always qualify and quantify everything, or in other words, trust nothing, test everything.
Before we get into a discussion about the technology stocks, I went looking for information about the different areas in our economy that contribute to the nation's growth, and found data from the Australian Bureau of Statistics. What it shows is the level of monetary contribution that the technology makes to GDP growth here in Australia. The contribution to GDP in Australia was $167 billion in 2020 to 2021 financial year.
Well, I got that in my piggy bank, haven't I? Most of you will know that what GDP stands for, but for those who don't, GDP stands for Gross Domestic Product and is the measure of the market value of goods and services produced over a specified period, which is generally quarterly. If GDP is growing, then the economy is growing. Now, we believe the technology sector will continue to grow over the next decade and in turn contribute more to GDP, and therefore we really believe it's important to maintain an eye on this space for yourselves.
All right, looking at the slide on your screen right now, you can see on the graph that technology is the third highest contributor to our nation's GDP, which is quite significant, and some may be surprised to see it is well ahead of healthcare. There is now a huge focus on technology and the tech workforce in Australia going forward. Deloitte's reported the contribution of diversifying the tech workforce means an additional $8 billion each year to the economy, and the Australian government reported in an economic analysis in August that tech exports currently are worth $8 billion could be worth $19 billion in 2030.
Wow. Now, when looking at the Australian stock market sectors, while it's clear that currently the combined value of companies within the technology sector are relatively small to other major sectors such as materials and finance, we know that technology spans across all industries and impacts our everyday lives. Now, today we cannot actually do anything without technology, and as more technology companies seek funding, more are likely to list on the exchange, and this means more opportunities for those who learn how to trade them. So Janine, now I think it's time we're going to get into the charts.
All right, fantastic. On your screen is the New York Stock Exchange's FANG Plus Index. This index provides exposure to 10 highly traded tech giants, which are the 5 FANG stocks plus 5 other big tech stocks like Alibaba and NVIDIA. NVIDIA. You say it better than me. You will notice this FANG Plus index peaked at 7,543 points in September. So let's now take a look at some of the stocks. So did you want to comment before we move on to the stocks? I mean, just the fact that it's pulled back.
Well, mine was, and what I talk about when I look at the US is looking at this really, really strong rise all the way through to that point there, which is February this year. But since then, it's pretty much, even though it's at a bit of a down move and up wave, it's pretty much gone sideways.
Okay.
So it's been really, really flat. So that's all I want to talk about.
So it's not proving that it's going down yet?
Correct. It's not proving it's going down. We haven't had any big major moves down because we've only had that.
I think that's a really important point to make.
That little bit of a move there.
That's a 10% fall, which is not really anything, is it?
And that's nothing. There's 17%. It fell down into March this year. So I think it's the sort of
fall that we're looking for if there's really is a decline.
Yeah.
So if we go from there, we can have a look at the likes of stocks like Google. So moving through the FANG stocks, Google could be a really good one to talk about.
That's been a phenomenal stock this year.
Hasn't it been amazing?
Phenomenal this year.
Yeah, and it's only been down. If we look at the actual decline, we can see on the stock there, it's actually about 10.6% to the low recently, which is sort of in line with where the overall index was that we just looked at, of course. But it's a big stock within that index.
Correct.
So Facebook, another interesting one. Now on the chart here, I'm showing on the right-hand side, you may not be able to see this quite clearly, but it's a 16% drop. So Facebook has had a much bigger decline than what the other stocks in this
It's
space have.
facing a lot more challenges than Google in the marketplace on
Definitely
with
from
trust
governments.
and governments and all sorts of other things. And obviously it went offline last
Yeah, well,
week.
I was listening to the Prime Minister talking about how he's pushing the issue of the fact that people can make
Yes.
statements online and they don't have to identify themselves. And
They don't.
The companies like Facebook, he's considering them, are they publishers
Well,
rather
they
than...
are, but they're not. Legally, they're not. In the US, if you're legally a publisher and in the Constitution, not the Constitution, the whatever you know, their laws, if you're a publisher, then you can be sued for defamation. But if you're not deemed a publisher, you can't be. And all the social media companies aren't deemed as publishers, and they're fighting hell for leather not to have that change, because there would be bazillions of dollars of lawsuits for people who've lost their businesses, committed suicide, you name it.
But isn't the individual the publisher? The company's just
No.
providing the facility for people to be able
Correct.
to make their statements and have a
Correct.
voice.
So who's responsible? But if the person's not putting in their real name and their real credentials, then there is no freedom of speech.
Yeah.
And so that's the point.
That's
is
the
if
point.
somebody had to put all their legal names, you wouldn't get all the rubbish we get on the social media
Okay.
now and all the crap you put on people.
Well, I think it's coming. I think it's just a matter of time.
It has to. It has to. Because
But look,
people need to be accountable.
Let's get back to the charts,
Yes.
okay? I'll
So-
let you get off your soapbox now. Okay, so Facebook has the
Yes.
potential to go up. You can see they've got some lines there overhead. I thought we'd just talk about Facebook for a little while, given it's a topic of interest at the moment. So it could head to as high as about 410, maybe up to 440, 450. But at the moment, it's pulling back. So I think
Correct.
the upside potential's there, but it's just a short-term downside
I think
risk.
short-term's got more to go.
So I wouldn't be buying this one right now, but I'd be waiting for an opportunity. Let the bottom flush out. Let the people who want to take the highest risk take it, because it could always fall further than what you think.
Yes.
And then wait for it to actually start moving back up again before looking for a proper entry. So that's Facebook's an interesting one. Now, just to quickly spin through a few other ones, we've got Amazon, we've got Netflix. I'll come back to these in a minute, but just look at the shape of the chart of Netflix compared to some of these other ones like Amazon that we've been looking at. It looks like chalk and cheese, doesn't it? So Netflix looks like it's already gone through this process of consolidating. It's fallen 20% in the process and then taken off. Amazon is actually still in that process.
But isn't it interesting? It took off like a rocket after the COVID low, because everybody had to stay at home, and so they're
Yeah.
all subscribing to Netflix. And then we're seeing for the last 12 months, if you're looking at that, for the last 12, since August.
So this
last,
is
it's gone-
Amazon, yeah.
Sorry, that's Amazon, sorry.
Yeah, so what I
thought
was
that
saying to you
Netflix.
was Netflix has gone
sorry.
gangbusters, and now there's talk about how Netflix could increase the growth could increase, because coming into the holiday season, they're expecting that there'll be a lot more people subscribing to it.
Well, that's what they've got to do. They have to get more subscribers. Obviously, with Amazon, people buy goods,
Yeah.
and that's really what they're doing.
But it's
So-
trending up at the moment, so it's probably lower risk, right, than a lot of the other stocks right now, given that they're falling away.
Did you know, and you probably, unless you've watched my report on Flix, did you know Amazon is a part owner of an electric vehicle company in the US, and they're designing, and they've already ordered 100,000 electric delivery vehicles for the US
Oh, that's
to be
fantastic.
delivered by 2030, and it's also part owned by Ford.
Well, there's a lot of companies going greener.
So they're diversifying, and so because obviously they've got all these delivery vans delivering things around the place.
Makes sense.
So now
That's smart.
They've ordered these, yeah.
Yeah, so look, I mean, with Amazon, we can see there, it would have to get through this high here, at least as a minimum, this September high, to actually look like it's starting to move back up again.
I agree.
Because there's a real risk right now that it could take out this low here. So that's what I'm looking at. But if it does keep going up, we're talking about 4,000 to 4,300 is potential for into 2022. So that's Netflix we've looked at. I think we've run out of time to look at the American ones at the moment. We need to split our time and cross over to Australian. But we'll quickly look at Apple. Apple's broken out of that sideways move, but could come back into consolidate around that 130 if it takes out this low. Be great if it did. It'd produce another opportunity for people if they want to get into it, a better opportunity to see it come back and then take off again.
Yeah, I don't think the new iPhone's going to help them too much.
And you wanted to talk about Microsoft Corporation as well.
Well, Microsoft and Apple are the two biggest corporations in the S&P 500. So, and they are big chunks of it. And obviously, those stocks you've talked about already, the FANG stocks plus Microsoft and Netflix, and possibly a couple of others, like are about 25, 27% of the S&P 500 roughly just on their own. And obviously Apple and Microsoft are leaders in that field. So, and you've got to think, Apple took off like a rocket after COVID. Microsoft did pretty much the same.
So this is only 8% down. Apple's actually about 12% down. But I don't want to rain on your parade. However, I just look at these gaps here and I'm thinking they're going to come back further. No,
that's not raining on my parade. That's what I'm suggesting. That because of COVID, everybody bought all their gear. You don't replace your computer every year. You don't replace your mouse doesn't break down every year. So my thinking is they've got to come back a little bit because the economy in America is looking okay, but it's not looking super strong.
There's so much new technology that Apple are coming out with at the moment.
Yeah,
it's exciting technology.
How much money have people got if they're not working as much?
Well, they've got more, so they can spend the money on it. So therefore, there's people who are at home who are actually not going out.
I think they've had their spurt with their 5G phones.
It's only a percentage of people who are without work at the moment, okay? So it just depends. And I'm not sort of taking away from what those people are dealing with because
employment not looking super
great.
Fantastic in the US. There's lots of other issues going on in the US.
But yeah, look, we both think that there's a pullback coming, but we'd like to see them then move back up again. So let's move into the Australian side of things. So looking at the ASX, S&P ASX All Technology Index there on your screen, XTX is the code. What do you think of that? It looks just really nice and orderly, coming back to test that sideways move, a bit like what's going on with the US stocks.
Yep.
But if it finds support and doesn't take out this low here, then we could see it move up again. So
I think there's some exciting stuff in our technology. I really do in our sector, and I think Australians are quite innovative, and I think that's the big issue that both of us have on.
The frustrating thing for me is to sit there and watch some really good companies come out into the Australian market and then people don't get behind them in Australia. We don't protect anything and they get swallowed up by big companies overseas.
Yeah, I mean, I was just only saying earlier, I did a podcast, which is going up, I think, Thursday in our podcast, Talking with Podcast, on an Australian company, a Western Australian company that's got this great battery technology that Tesla's excited about, or Elon Musk is really excited about, because it could have huge ramifications from the electric vehicle market. And I mean, that's great technology. And it's coming out of mines in Western Australia and everything else. But how long before somebody gobbles that company up?
Yeah.
You know, and that's the disgusting thing in my
But how do you let a company like Afterpay get swallowed up when it's essentially like a bank? How do you let that happen in our country when we need, we've got the big major banks, the Macquarie Bank, and we've got Suncorp and the second tier banks, but don't we need more of Australian companies running, on our share market as well, that are out there of that size, like Afterpay?
And I know people are looking to Z1P for, the opportunity in that space, and they've gone into America and they're doing okay there, but they're still not delivering yet.
Okay.
But I still would be a company I would keep my eyes on. But what else?
So let's have a look. So we've got, here's one of your favourite, WiseTech's taken off. So while we wouldn't be recommending this as a buy now, I'd be waiting for it to pull back and consolidate a bit, and then there could be more opportunities with this one down the track.
I do love this stock.
So that's WiseTech. There's the Afterpay story. So obviously the sector one that we just looked at before, I'll just flick back to that, looks a lot like Afterpay because of its weighting.
Stock, isn't it? Yeah. Really?
Yep. So therefore, we'll just skip over that one for now because we've already talked about it. And Appen was one that you were quite hopeful of, but that's
every week I'm getting more excited about this stock, but it's still months away from buying. But I get excited about it. It's in that artificial intelligence space. It's got to be exciting.
Okay, I don't think it's exciting until the chart turns around.
Well, I know that, but I get excited every day.
Okay.
And hopefully it eventually.
One day you might be right.
No, but just keep it on your watch list because I think it's going to be a stellar stock.
The further it falls, you're going to be more right.
The more it falls, the more I'm excited. That's what happens.
Okay, so looking
I'm not buying it.
No. So looking at Altium, it's quite odd on the chart what's happened there, and it maybe the data, I'm not quite sure there what's happened. It's not one I followed really closely. Is it one that you followed closely?
Yes, I do. I've got this on my close watch list as well because, again, there's another stock I really, really like, and it looks really messy the last couple of years, a real messy stock, but I just think it's just consolidating, and I think we will start to see this take off again. But it's like there's so many other companies.
But how do you make it look, it's not even going to look interesting to me until it gets above that point there.
I know. But it's
it's doing some good stuff, but it doesn't look good.
I do like it. And Xero, I always loved Xero.
Xero's a good stock. I mean, at the moment, it's pulling back and testing that support level.
And I think it's got further to go.
Well, we need to see it pull back and then head back up to challenge those highs again. So just waiting on that. But this is a really good stock in this space.
It is a really, really good stock in this space. So these are all bigger stocks in this space, or the bigger ones in the technology space.
So so if you were looking for opportunities, coming months. Which are the ones out of the ones we've looked at on the Aussie market? WiseTech?
Look, I think WiseTech, I think Appen.
Altium?
Yep. And look, I even think Afterpay in the next couple of months might give you a good buy as well.
Okay, so look, Afterpay and maybe WiseTech when it pulls back, and
Correct.
I like Xero, but obviously it'll be buying again once it goes back through this level up here.
But don't go past some of the other smaller ones. Like I know I mentioned a few months back about Life 360.
Yeah, that's
smaller
right.
company,
Yeah.
and that's done phenomenally well, and that's coming back the last couple of weeks. So it might adjust a little bit over the next month or two, but then that could present another really good opportunity. It's an American company listed in Australia, so it's quite interesting that way. It's normally the other way around, but it's quite a good company. There's a few other companies like that on our marketplace that are doing some great things that are they're not micro caps anymore, basically. They're better, they're a little bit more liquid, but they're worth
And you'd
it.
expect to see more funding going into that space coming up, and more listings of these types of companies down the track as they want that funding.
Yes. Yeah, and that's the other part I'd be looking at, because there's a lot of good innovative technologies coming out. I like ones involved in blockchain, and I did a podcast on that, which I think went out in today's newsletter. It's about a company, I can't remember their name, but it's a four-letter word, an Australian company that's working with the Australian government and with Vanuatu, and they've got a stable coin that they're working with Oxfam, and people can donate money through this stable coin, because the stable coin is like $1 for $1. Basically, one coin equals $1. And so you're donating money and it's going straight to the person who's got a card who needs the money, and they go into the shop and spend this stable coin in the shop in Vanuatu, and then the shopkeeper gets the money themselves. So it's a way to get charity. We're cutting out all of the middlemen in
That's fantastic.
It's amazing technology, and the Australian government has paid for some of the pilot with this Australian company. Interesting technology. And that blockchain can really, and they're doing a lot of other things, like Fiji, they're looking at fishing. They're using blockchain for fisheries, managing fishing, and a few other different things in Fiji. So there's some really interesting companies.
Okay.
And Australia's really well poised for all that with some of these smaller technology companies. So don't think you have to stay with some of these big companies either. Keep a watch list of some of these smaller ones. They are really exciting.
Great.
I'm excited about our sector.
Thank you for that.
Okay, so what I hope everybody has learnt from our topic tonight is that the tech stocks are really important and they've got great opportunities, so keep your eye on them. And right now, whilst we believe there may be further upside in this space, the risk of the downside has increased for a selection of these companies.
The biggest challenge that investors face with these stocks is FOMO, which causes many to jump in too early or too late. So I suggest that you be selective about purchases in this area right now, and more importantly, be vigilant with setting your stop losses. It doesn't matter how good a company is, all stocks will fall at some stage. So while the current view is not to bail out of tech stocks, we encourage you to manage stocks you currently own if your exit triggers, so that you can lock in profit and be open to opportunities to buy in the sector, as there may be good opportunities in the not too distant future. And if you plan to trade, always weigh up the potential of reward versus risk before you enter.
All right, well, that's it for our topic for tonight. Now, before we do get into our next email, I hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. Remember, the number you need to call is 03 for Melbourne 9290 9988. Now it's 9290 9988. Now while you call us, we're going to get into answering the next email, so call us now.
Okay, our next email is from Nigel. G'day mate, I found you on YouTube and enjoyed the content. I think he's referring to you. My question is, do you offer a personalised share buy and sell recommendations for a fee? I've just opened up a St George share trading account through my bank, but I don't have an economics degree and I'm not well connected to the big end of town. So I'm looking for solid advice on share trading and what stocks to buy and when to sell. Regards, Nigel. Interesting question there.
I put this one in because he didn't specifically ask it for the show, but I did see it come through, and I thought this was worth us talking about on the show, because how many people think like that?
True.
How many people think that, I don't have an accounting degree, I'm not an economics person, I'm not a finance person.
So what?
So what?
I just think that it's not relevant to doing this and to selecting stocks. So a lot of people pick up your book and by reading the book get enough knowledge to feel confident enough because they know how they're going to manage their risk.
Correct. And the other part of it is leaving enough to, like we said earlier, we talked a bit about qualify and quantify everything. So test everything, trust nothing. And it's the same with these reports. So, and getting tips or recommendations from a broker or from a stock tipping report, you still need to know what you're doing yourself because you're the one still buying and selling. And so you need to manage the portfolio and understand how it's working. So, and seriously, I could teach any kid, I can teach a 12-year-old to do this really, really simply. They could read my book. They'll understand it, they'll be able to do it. So you don't need an economics degree, you don't need
because they don't question
a PhD. They don't question, and it's just doing it, and it's understanding the marketplace. So the best place that we would recommend you start is just to buy my book. I mean, you can buy my first book for free, you just got to pay for the shipping, so it's worth the $9, I think, for the postage to get it, because you'll start to understand how to start constructing a portfolio and working on it. So if you do go into, using a stock tipping service somehow, that you'll be able to look after yourself and make sure you know when you're buying and why you're buying and how you're buying and when you're selling and selling rules. Because I know right now, the last 12 months, 2 years with COVID, we've seen people, we've seen retirees jumping in the market and trying to make a lot of money. We've seen kids jump in the market, and a lot of people have been making money in the market through sheer luck. And this SHIT hasn't hit the fan yet. And when that starts to happen, they're going to lose big time. And you and me know that because we've seen it time and time and time again. All I want is for this gentleman is to say, well, hang on, if that time comes and you haven't educated yourself enough to understand that, you will lose, even if you're using a stock tipping service.
Yep.
And a lot of people are that. So now's the perfect time to learn.
All right, it looks like we have a caller on the line. Is it Francois we've got on the line? Fantastic, Francois. Where are you calling from?
Hi, Janine. I am calling from Melbourne in Victoria. I know I still owe Dale a beer from previous discussions.
He's nodding his head, yeah.
Two now.
We're not allowed to do that at the moment, but hopefully soon we'll be able to get out and grab a beer.
Absolutely. I met Francois back March last year, I think.
That's right.
The last time I did public speaking.
It feels like a lifetime ago, Dale.
It was last century in my mind. I've been locked down since then. So, but thank you for giving us a call, Francois.
Now you're too busy talking about beer and thinking about beer, and I'm looking at the stock that he's wanting. So, Francois, can you please tell us what stock you'd like to talk about?
Thanks, Janine. I'm looking at BLD. It's a stock code, Bordal. Do not own the stock at the moment. I've traded the stock previously successfully, and I know that having done so in the past doesn't necessarily guarantee me success in the future. But looking at it now, again, to possibly get in if it breaks above sort of currently maybe around hopefully getting in above 6.5. Just your thoughts on the stock and whether you think it could be a good possibility moving forward.
All right.
Short-term trading, please, Janine.
We're glad to hear your voice. Thank you very much for calling.
Awesome. Thanks, guys.
Thanks, mate. I look forward to the call when we have the beer.
Yeah.
Thanks, Dale. Thanks for the
All right. Looking at the stock on the screen, hey, look at it. I mean, the big pullback we've seen, what percentage fall do you think?
What's more important than drinking a beer with a nice person?
Oh, geez. Can we focus on the stocks?
Sorry.
All right. Now, look at this. 23% decline. Wow, that's a good start in terms of a setup for a potential opportunity. So at the moment, it's just consolidating off that bottom. There's no real decision either way. It could come back into this previous sideways move. There's a potential it could head back to 525.40 if it goes up a little bit more. So the risk is if it takes out this prior low, obviously we're not looking to buy the stock, but we need a solid entry rule and we don't have it yet.
Yeah, and I think, we've only had, 1, 2, 3, 4 weeks up. This week's obviously showing a bit of indecision through here. So I think if we had 5 and 6 weeks up, I'd be a lot more bullish on this.
Yep.
But right now at the moment, this could just be a move just counter to the downward move at the moment, and it is possible. But really, I want to see a see it stay above that over the next few weeks before I get too excited about this stock. But I do like this stock. It's a nice stock.
Yeah, nice to see that 20 odd. When a stock falls around 20 odd percent, you know that it's had a decent, whoever was going to sell is more than likely sold or it's close to it. So it's probably reasonably close to the bottom at this point. But like I said, look at the history of it on the monthly chart, Dale. If you look at the this side of the chart, you can see historically this stock likes to hang around these sorts of levels, around that $5.40, $5 mark across here. You can see there's a lot of activity through the history of the stock around these prices. So, ideally, I'd like it to find support where it is now, but if it has that flush out to the downside, at least that there's going to be a trend line entry potentially that you could enter.
Yeah, well, it's a stock. It's quite a volatile stock. It does make good money quickly, and you do have good rules on it.
And it has a history, doesn't it, of going sideways for 3 or 4 months at the bottom before it then takes off. So it'd be ideal if it actually does the same thing.
Look, and Francois knows how to trade this stock. He's traded it a few times profitably.
Yeah, okay.
I know that in the past.
Good choice for his watch list.
He sent me a couple of emails in the last 12 months since I met him for the first time. As I said, I met him for the first time in March last year, and he bought me a beer. I thought, this guy's I've got to get to know. Smart move, because he sat next to me while we were eating dinner after this thing and gave me beer, so he kept plying my brain. I thought, what a way to get free education, isn't it?
Just make you drunk.
And no, please don't send me lots of beer, please. Cool. But if you do want to be like Francois, please give us a call, 92909988. Give us a call now so we can have a chat with you. But now it's time to get into another email, and this one is from Leong, who says, hi Dale and Janine, I've been following EML for a while, looking at the weekly chart between September 2020 and April 2021, the uptrend, and then it fell out of bed since then to now. Thinking it would move up to fill the $4 to $5 gap, recently haven't had another fall. What do you think the share direction will go next? Brought it at around $3.65. It is close to my 15% stop loss. Should I sell it and move on or hold to see whether it will move up to fill the gap? Many thanks, Leon.
Yeah, look, I mean, it's interesting, isn't it, how it's fallen so fast? How many stocks do you see on the stock market that fall like that?
Oh, not that
So
many.
we're talking about the open was actually down here, so it fell 40 odd percent from around the close here. This was back in May 2021. All the way down to this open in May.
So what happened on that day?
Well, I haven't followed the story.
No, I haven't followed
so
it either.
48% fall, I would say that's pretty dire in anyone's book in terms of a stock falling away, and actually flags the potential for further downside. And given that last week it actually fell so strongly from, it was tracking around these levels, around 370, 380, to then fall and close low, and close below this low here with this blue bar, then that just only increases the risk of it taking out the low back in May 2021.
Yeah, and I think you can't really. Not all gaps will eventually fill. All gaps will eventually fill on any stock, but you can't guarantee that, or you can't bank on that sort of stuff.
Yeah.
And a fall of that big and a gap of that big is going to be hard to fill pretty quickly. Because obviously it's happened for a reason, but I think this stock's got further downside.
Yeah, I
don't think it's going to be a good one for you, mate. I really don't. I think you're probably better making sure you take that stop loss and protect your capital. That's what I'd be doing.
The only thing is, if it turns around in the next week or so and closes high on the weekly range
You're gonna give
on a
him
Friday.
hope.
No, I don't want to give him hope, because I want to, if he set a stop loss for a reason, so he's a smart man in doing that.
Absolutely.
So we congratulate you on having set your stop loss. It's now whether you're going to follow through, and that's the important part. But this point here is that sometimes stocks, when they have that flush out, they will actually turn around a week or two later. Yep. So that's why. But you can never tell. Are you going to sit there hoping and waiting, or what if it falls another 10%?
Well, he's already in it, so he's not. As long as he's got his stop loss, that he's got his downside is very limited to where it is now.
Look, one more point too, that Dale, I agree with you on that one. One more point too is notice how it fell back in COVID. How we saw it continued down. Let's just have a look at the range first, just quickly before we move on. And the range of this fall was actually 80%, so double what the market fell in that time. So that tells you straight away the type of stock that you're dealing with, and be prepared for this sort of thing.
Yeah, but a lot of people, I'm not saying this gentleman said this, but a lot of people, because of Afterpay, were jumping into some of these smaller buy now type, pay later type stocks, like Z1P and his EML and some of the other ones out there, thinking they're going to do the 1,000%, Afterpay did, and that's not necessarily the case because the market's got a lot more competition in it now.
But the sad thing is it was looking beautiful before that news came out. So, I mean, you and I would have looked at this and said, oh, it looks good, you know, and look, it took out that high even. So you couldn't have picked that was going to happen.
You wouldn't have picked that, as obviously some sort of announcement came out, and somebody might remember what that was. I don't remember. I don't follow this stock personally, but anyway, it doesn't look super strong right now.
All right, fantastic. We've got another caller on the line, and it's Michael. Hi, Michael. How are you tonight?
Good. Thank you, Janine. How are you?
Good, thank you. And would you mind telling us where you're calling from, please?
Yes, I'm calling from Wollongong, New South Wales.
Wollongong. Oh, how is it there? Is it really windy at the moment?
Yeah, it was windy this morning and raining as well.
Oh, look, sounds like you understand Melbourne. Would you tell us what stock you've got for tonight? I'm really excited to hear what you've got to say.
Yeah, I've picked energy stock WHC. And I would like to ask you your opinion about the movement, like a next movement in late May this year. And I'm in a good profit at the moment. It looks it started trending up. So I would like to see your opinion, what holds the future for this stock.
Okay, awesome. Look, happy to talk about this one. Thanks very much for talking about WHC tonight. I can see they're so strong has been the recent rise. Quite exciting to see WHC. Not everybody is a fan of this stock for obvious reasons because it's a coal stock, so it's quite controversial.
But energy is going very strong around the world, and they're going back to some of these coal reserves.
Yeah, but is this going to be like because what's going on, okay, is they've switched out of growth type stocks temporarily.
Correct. Yes.
Okay, but at some point, these other the growth type stocks like tech will get to a point where they become valuable again.
Correct.
And the market will just switch back into them and they'll just say, see you later, we're not interested in you anymore. And they'll jump out of these ones, the energy type stocks again.
Yeah, but at the moment, there's a little bit more of a resurgence into some of these fossil fuels at the moment. And I was only reading about that the other day, about there's a lot more oil and coal, etc., and getting back
the
more
oil
into
price has
piles.
taken off.
So some of these,
It's a conflict that's going on as well that's having an impact on that.
Yeah, but again, as you said, it's just going to be switching around some of their portfolio. So right now, he's in a really good profit at the moment. He's probably up somewhere around 100% or more on that. So he's asking where you think this is going to go.
Look, I think that the stock's getting close to where I would say it's going to peak out at this point. I don't see that it's got too much more to go, and I'd be really wanting to set a stop loss on this that was sort of aligned with the way that the stock trades, and it does trade and trend really well.
It does.
So trend lines can work really well, but the problem with that for some people is they have to trust the trend line, and if you haven't studied the trend lines, how are you going to trust it? That's the issue.
Correct. And nothing works 100% in any trading rule, buying or selling. But you've got to use them enough, and then you've got to use them properly. And this is the issue I find a lot of people. When they send me trend lines on their charts, they go, hey, I've read your book and I've done the trend lines, but their trend lines aren't great trend lines. It's because there's, what a lot of people think they know how to do stuff, but then they don't really know how to do that. And that can cause some inconsistencies. But I agree with you.
But I like it if you were holding it, you'd stay with it until it actually confirms that it's starting to fall away and have a good rule on it to trail the stop up. Yeah, it should form a trough over the next couple of weeks.
The trick really, mate, is while it's going up, stay with it, and just have a moving stop loss underneath it, or whatever you're comfortable with, whether it might be 10 or 15% from the recent high price, or the last trough, or some other different technical point that you might want, or using a trend line on it. But make sure you've got the line in the sand, because the golden rule is let profits run. So whilst it's going up, you've got nothing to worry about. You're well and truly in profit. It's just about protecting that profit. That's really all you've got to worry about.
All right, we have a question from Daniel. Hi team, a few weeks ago NXT released an announcement after market close on a Friday disclosing the CEO sold off around 50% of his shares to pay personal tax liabilities. At Monday's open, the share price dumped and has since declined around 17%. As an experienced trader, does this damage your confidence in a company? I believe this happens more often in the small cap space. I bought in at 11.40 when my own rules triggered, admittedly a little before confirmation, but I had a stop loss in place. I do like this company for the medium to longer term though, so would enjoy your thoughts from here. Kind regards, Dan. I love the fact that you've said that you had a stop loss in place and you had rules. That's fantastic. And now we should just have a look at the chart, shouldn't we?
Correct.
It's a good company, NextDC.
Well, no, you've got to answer his question first.
Yeah, okay.
Because it's basically talking about the directors sold 50% of their shareholdings to pay tax, which is a reasonable thing that they would do.
He said a director, didn't he?
Director, a director. So he's saying, would this damage your perception of a stock? And then my answer would be no, it doesn't. That happens all the time. Directors sell interests all the time. Probably a big chunk though. Normally they don't sell 50% of their holdings, do they?
No.
They normally sell smaller parcels than that, but it wouldn't damage my thinking on the stock. It's more about, you can't predict stuff like that, but obviously the big fall there on this company is a bit annoying.
Look, I guess right now, even though this is a really good company and I do like the stock, the problem is that it's been sold off in such a way that's caused a question mark in my mind about the big picture for this share.
But that's what's happening at the moment. We're seeing a lot more volatility. If announcements are happening, the stocks are being punished both really heavily on different announcements, and we're seeing that.
I guess I'd question the timing. Could the stock have been sold off over time?
It could have been.
Could he have waited until it went through the high, or was an urgent reason to sell it? I mean, I don't know. But look, at the moment, given that it's pulled back like it has, and we're seeing it, it just makes it look really toppy.
It does.
In terms of a long-term picture even, that whole topping scenario that's unfolded, it really begs the question as to whether we're going to see NextDC take out this low in March 2021 if it keeps falling from here.
Well, it could, yeah, but it is a great company. I do like NextDC. It's a growing company. It's in, obviously, data centres and things like that, so it's a good technology stock. And that's quite consistent cash flow, and it's only going to grow because of data centres. Now they do have some competition, but I've looked at this company as a great company. It's just to me, this is more of a short-term blip in its share price.
I can't see why he's actually purchased it, but what I do like is that he's purchased it. You can see there's a really important level around, not far from where he's purchased it, somewhere around this 11.50, maybe 11.80, even down to $11, where there's a zone of support across there.
Well, he did say he purchased it before it confirmed. He purchased it on rules, but before it confirmed. So he sort of broke his rules.
Yeah.
But
it looks like they probably would have confirmed anyway, because if he was in here, there would have been opportunities, reasons, technical reasons, trend line reasons, all sorts of other reasons to get in. Reasons in the Trading Mentor course would have got them in there.
It'd be interesting to see who the shareholders were in selling this, whether it was the big end of town or whether it was more retail traders who would be knee-jerk reaction to it. Because I know we've seen a lot of that since COVID.
Okay, I see where you're coming from. So what you're saying is it could just rebound back from here, because it's been a reaction to a decision.
Well, overreaction
to a decision, and then it just rebounds. Okay.
Because I mean, ASIC was talking about yesterday. ASIC's come out and has obviously putting the spotlight on social media influencers about giving financial advice and pump and dump schemes and things like that.
Right.
And I was reading the Fin Review yesterday that they put a tweet onto one of these pump and dump websites, and it's like a pump and dump group or something, and they were trying to pump this stock, and the people in this chat didn't believe ASIC had posted a tweet about it to say, you could be charged and blah, blah, blah. And the thing is what people don't think about, retail traders don't think about, is that ASIC actually knows who's trading.
Right.
They actually know every person that's trading, because you have to do it in your own name. So it goes through brokers, they can track every single transaction. And I'm not saying that's happened on this stock, but I'm just saying a lot of people will see news of these retail traders.
So they're watching these tweets.
And they're watching these tweets, they're watching some of these chat forums, they're blah, 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 and then they just follow the leader. And that is fraught with danger, because up till now...
That's good, because it protects the little people.
It does, and I think ASIC should be doing it, because how many YouTube videos out there by people that aren't licensed? Like, we're fully licensed to do this. We have our disclaimer at the front, we have an AFSL license, we're fully licensed to do what we do. And we're experienced and knowledgeable, and that's why ASIC want people to go and talk to people who are experienced and knowledgeable but are regulated so that they are getting the best advice, not just from anything. And I'm not saying this is being pumped and dumped next DC, but I'm just saying it could be just a whole lot of retail traders thinking, oh, the director's sold, let's dump it, because I know they tend to panic a little bit, where you and me don't tend to panic at that sort of stuff. We go, oh, okay, that's normal
because
stuff.
would you panic with this pullback right now?
No, not really. I think it's a bit deeper than what I thought it could be, but it could just rebound pretty quickly.
Okay. All right, well, I guess the next couple of weeks will really be the telltale. Let's wait and see what happens over the next couple of weeks.
All right, let's get into our next email. This one's from Falzia, who says, hi, Dale and Janine. What is really happening with the big three miners? Now, they have started to go up, particularly Rio and FMG. Is it the case of a dead cat bounce? Would really appreciate your analysis. I don't own them, but would like to buy in. Thanks, Falzia. Now, dead cat bounce. I know they went up last week.
Yeah, I like the conversation around dead cat bounce. It just conjures all sorts of images in your mind, doesn't it? But I mean, dead cat bounces generally happen at long-term bottoms.
Bingo.
So, this is not a long-term bottom for a start. Yeah. So potentially, there's a lot of talk in different places around the internet, and they just, sometimes you can pick up information and then get it wrong because other people have been talking about it out of context. I just think that we're too early to say. You just look at the chart here. It's only a couple of weeks off the bottom. We've had 3 weeks up off that low. There's no way you can determine whether that's the low at this point.
Well, there's not even 3 weeks. It's this week is just, this last bar is just the 2 days, yesterday and today. So 2 weeks ago it opened up and then it traded lower. It closed lower, so it's a little bit indecisive. But no, look, it could be. But it could just be this sort of thing happening before it falls away again.
Yes.
It's not necessarily, something that's, we can bank on at the moment.
Yeah, and look, I mean, there's no difference between that really and what's happening with BHP. BHP is very similar, of course, but except it's only had the last 2 weeks. Last week it was actually indecision. It was an inside bar compared to the prior low. And then we've seen one tiny little week up where you couldn't even say that's a move up off the bottom yet.
Nah. So, Falzia, I'd say sit on your hands for the moment, because it may not be a dead cat bounce. It may just be a dead cat that keeps falling away.
That's a bad description. One thing I would like to say, though, is I do prefer Rio over BHP. And I'm wondering, BHP, is it the least popular stock at the moment out of the three?
Yeah, don't know why, but longer term we do like these stocks, but right now they're looking pretty weak, but it could just be a very short term move up before they do fall away a little bit further. So just sit back on your hands and take it easy for a little bit. But thank you for your emails. Now, okay, well, that's our thoughts on Rio and FMG for you, Falzia.
If you called into the show and missed out this week, then keep trying, as we would have enjoyed the chance to speak with you. Just make sure that you write your question down and be back here watching the show next week, as you'll get another opportunity. Yes, that's right, we're not closing it off to you. You will get an opportunity to call in when we give you the cue.
Now remember, the best way to have your question answered is to call in between 7 and 8 p.m. every Tuesday. Otherwise, email your question right now to info@wealthwithin.com.au. Remember to include Wealth Within Live in the subject line. And also remember to in order to show your appreciation for us helping you by answering your questions and educating you, all we ask is that you subscribe to our channel first and then send your email in. Also give us a big thumbs up and a like.
Well, that's it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
All right, remember to put this show into your calendar to join us right here on the live Australian Stock Market Show every Tuesday, 7 to 8 p.m. Australian Eastern Time, not Queensland time, Melbourne time.
As always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.